Your bank account is no longer private. That's not political rhetoric. That's not conspiracy theory. That's not something someone is arguing about in a committee somewhere. That is a documented, active policy change that moved through the Social Security Administration this summer and is already being applied to the financial lives of millions of Americans right now. The government is logging into your bank accounts without your permission, scanning what you have, and making decisions about your monthly benefits based on what it finds. And if you're on SSI, supplemental security income, you need to understand exactly how this works, what you're vulnerable to, and what happens to your check if they find something you didn't report. Because most people I hear from have either never heard of this rule or they heard some scary headline and moved on without understanding what it actually means when that scan hits your accounts. This isn't something that might happen someday. This is happening right now in August 2026, and it changes everything about how your benefits get verified. If you're depending on SSI, if you know someone on SSI, or if you're on any form of Social Security and you're wondering if this extends to you, it doesn't today, but the machinery being built for SSI is the same machinery that will eventually reach every senior in America. You need to hear this. If you haven't subscribed to this channel yet, do it right now. The reason is simple. These rule changes don't come with a government letter explaining what you need to do. They don't send you a tutorial. They just turn on the system, run the verification, and the people who suffer are the ones who didn't know it was happening. This channel covers every single change to benefits, taxes, and the rules that actually impact your money the moment it matters. Subscribe now and turn on the notification bell so the next update that affects your check doesn't pass you by. Now, let me walk you through exactly what this rule is and why it exists, because understanding the government's reasoning is what actually helps you stay protected from it. The system at the center of all of this is called AFI, Access to Financial Institutions. In plain English, this is the electronic tool that the Social Security Administration uses to log into banks, credit unions, and financial institutions across the country and automatically pull information about what you have in your FA accounts. This system has existed for years, but what changed in July 2026 and what's accelerating now in August is how often they're allowed to use it and what legal restrictions stand in their way when they do. For a long time, there was a threshold. The SSA would only run a full bank verification on SSI applicants and beneficiaries if you reported having above a certain amount of resources. If you told them you had very little, they often didn't look further. That threshold was a kind of speed bump. It limited how frequently the agency reached into your financial life. Under the new rule, that speed bump is gone. The agency is now required to run financial institution verification on essentially all new SSI allowances, regardless of how much money you say you have, and they're doing it more frequently throughout the life of your claim. This isn't just about being more thorough. This is about turning verification from an occasional check into an automated, continuous process. The reason this matters is because the government's logic is actually straightforward, and I want you to hear it clearly. SSI is a needs-based program. It's specifically designed for people with very limited income and resources. There's a hard resource limit for individuals, $2,000 in countable resources. Go over that number and your eligibility changes. Your check gets reduced or stops entirely. The SSA says that improper payments, money paid to people who were over that limit and shouldn't have been receiving benefits, are one of the biggest problems the program faces. So, the logic is, if we verify your accounts more often and more thoroughly, we catch resource problems before they grow into massive overpayments that we have to chase people down to recover later. On the surface, that's a legitimate argument. The SSA isn't trying to be sneaky about it. They're trying to prevent overpayments from building up into bills they later demand people repay. And here's the critical part. If the SSA overpays you because you were above the limit and didn't report it, they will eventually find out, and they will ask for the money back. That's not a gift that's being rescinded. That's a debt. So more frequent verification from the agency's perspective is them trying to prevent that disaster from landing on you. But here's where most people completely miss the actual threat, and I need you to really absorb this part. A lot of seniors hear SSI Bank Access Rule and immediately think it doesn't apply to them. They think they're on regular Social Security retirement, not SSI, or they're on Social Security disability insurance. And that's different. And technically, yes, this specific rule as written applies to the SSI program, but you need to understand where this is heading, because SSI is always where these verification expansions start. It's the needs-based program. Resource checks are already built into its DNA. So the tools, the systems, the automated bank access, the verification machinery, it all gets developed and tested inside SSI first. And then once the machinery is built and operational and people accept that it exists, the conversation in Washington starts shifting. And on both sides of the aisle, the idea of means testing is gaining momentum. That simply means adjusting what you receive based on how much money and assets you already have. You can't means test anything without first being able to see inside someone's accounts. The verification infrastructure being built and expanded for SSI right now is the exact same infrastructure that would be needed to eventually look at resources for Social Security retirement, for Social Security disability, for Medicare. This isn't speculation about what Congress might do someday. This is recognizing what the machinery allows, understanding that means testing is already in the political conversation, and connecting those two dots. So if you're thinking this doesn't apply to you yet, subscribe anyway, because it will. Because the system being built is the thing to understand. It tells you where all of this is heading. Here's what actually happens when the SSA runs AFI on your accounts. And this is where it gets very concrete and very consequential. The system doesn't just check the one account where your benefits get deposited. It's far more sophisticated than that. AFI can run up to 10 geographic searches tied to your information. It searches based on the address on your SSI application. It can also pull in addresses and identifying details connected to your representative payee if you have one. Here's the critical part that most people don't understand. The system detects the accounts you reported, and it also detects accounts you didn't report. This isn't about hiding anything deliberately. This is about forgetting. And that matters because a lot of seniors have accounts they haven't thought about in years. There's an old savings account at a bank that got purchased by another bank. There's a small credit union account opened 2 decades ago for a car loan that never got formally closed and just sits there with a few $100s. There's a certificate of deposit a relative set up years ago that you genuinely forgot. Even had the system doesn't care that you forgot these accounts exist, it finds them and it counts them. And here's the nightmare scenario. You've been operating under the belief that your countable resources are safely under the $2,000 limit. You've reported accurately based on the accounts you remember, but when the verification scan runs, it pulls up an old forgotten account with $1,200 in it sitting somewhere you haven't thought about since 2010. Suddenly, your total reported resources plus this found account puts you over the limit. Your eligibility changes, your check stops or drops, and all of it happened because of an account you genuinely didn't. Remember, the list of what the system is built to find is extensive. It looks for what are called liquid resources held in financial institutions. That means checking accounts, savings accounts, money market accounts, certificates of deposit, credit union share accounts, and special purpose deposit accounts, Christmas club accounts, holiday club accounts, any account at a bank or credit union where you can deposit money or hold a certificate. The system runs across all 50 states, the District of Columbia, and the territories. Around 96% of financial institutions participate in the automated system, which means the SSA can verify electronically without you ever being involved in that particular step. For the small number that don't participate, the agency uses a paper process. But the reach is nearly nationwide, and the BankScan isn't the only system in play. There are payroll information exchanges that can tell the agency what you're earning through an employer's payroll system, sometimes fast enough to adjust your next check. There are national new hire databases. There are wage verification tools specific to SSI. Each one exists to confirm a different piece of your income and resource. Picture. The point isn't to memorize all these acronyms. The point is to understand that verification in 2026 is automated. It's layered, and it's far more thorough than the system most seniors remember from years ago. The government has built machinery that most people don't even know exists, and that machinery is now turned on. Here's a concrete example of how this plays out in practice, using the exact kind of scenario the SSA itself runs through internally. Picture someone applying for SSI who reports a small checking account with about $20 in it and a $100, so certificate of deposit. Total reported resources, about $120. That's well under the limit. Under the old system, that tiny amount might have triggered a review or might have been accepted with minimal additional checking. Under the new approach, the agency still runs the bank verification, not because something seems fishy, but because verification is now required regardless of what the person claims to have. The scam comes back, confirms the checking account, finds no other hidden accounts, and the person's resources are validated right around where they said everything checks out. Everything stays under the resource limit. The process moves forward cleanly, no problem. Now change one detail. Suppose that same scam comes back showing the checking account actually holds 3 times what the person reported. Maybe they miscalculated. Maybe they forgot a deposit. Or suppose it surfaces an additional account they never mentioned, an old savings account with $800 that's been sitting dormant. Now the math is completely different. Now the agency has to dig deeper. It has to verify the actual value of that certificate of deposit. It has to look harder at all the other balances. And that small tolerance that would have let them skip extra steps no longer applies because the verified total is higher than what was reported. This sets off a cascade. Once a verification scan shows you near or over the limit, the system is specifically designed to keep checking, keep verifying, keep digging. You may face repeat scans at multiple points because the agency has been given explicit direction to keep monitoring when the numbers suggest a resource problem. One verification triggers follow-ups. It creates a paper trail. It flags your case for closer scrutiny. This is the through line across the entire life of your claim. If your verified resources stay low and consistent with what you reported, you may face fewer repeat scans. But if a scan ever shows you near or over the limit, expect to be verified again and again. Here's what you need to do, and this is the part that actually protects your check. Most people hear all of this and feel paralyzed, and then they do nothing. That's a mistake. There are concrete, actionable steps you can take this week that will either protect you or at minimum make sure you're not blindsided by what the system finds. First, if you're on SSI, make a complete list of every account with your name on it, not just the one your benefits get deposited into. Every account, your main checking account, any savings accounts, any old accounts at banks that changed names or got acquired, any credit union accounts, even ones you opened decades ago and forgot about, any certificate of deposit, any club accounts, or special purpose accounts. If you're not sure whether an old account is still active, call the institution directly and ask. The goal is simple. You want to know everything the verification scan would find before it runs, so there are no surprises that unexpectedly push you over the limit. This isn't paranoia. This is being informed. Second, add up your liquid resources across all those accounts and actually understand where you stand against the $2,000 limit. If you're comfortably under it, say $800 total, you have less to worry about from verification. But if you're anywhere close to that line, this is the moment to understand exactly where you stand. Being close is precisely when a forgotten account surfaces and tips you over without warning. Third, if your situation has changed, if you came into money, if you got an inheritance, if circumstances shifted, report it correctly rather than waiting to be caught. The systems are designed to find unreported resources. The safest position is always accurate, timely reporting on your end. Understand how any change affects your eligibility and what your reporting obligations are before the next verification. Cycle, not after. Fourth, when the agency contacts you about verification or sends you redetermination paperwork, respond promptly and honestly and keep documentation of everything. The single worst thing you can do in a benefits verification is ignore it or guess. If you're unsure how a particular account or asset affects you, that's exactly the kind of question to bring to a qualified professional, a benefits advisor, an advocate, someone who handles SSI cases, because the answer depends entirely on the specifics of your situation. But here's what you also need to know. The moment a rule like this gets public attention, a scam attaches itself to it, and this one is already happening right now in August 2026. Here's exactly how the scam works. A senior hears about the new SSI bank access or verification rule from a video, an article, or a neighbor. Within days or weeks, they get a call or an email from someone claiming to be a Social Security verification specialist, a benefits compliance officer, or a federal account review service. The caller says that because of the new 2026 rule, the senior's accounts need to be verified or pre-cleared, and that the caller's company or service can handle the process, protect the senior's benefits, or shield their accounts from the scan for a fee, sometimes a few $100s, sometimes a percentage of the benefit going forward. And here's the sentence that exposes this scam every single time. There is no fee, no service, and no third party that can shield your accounts from official SSA verification or do this process on your behalf. The verification is something the Social Security Administration conducts directly. There is no authorized middleman who can opt you out of it, pre-clear you, or protect you from it for money. Anyone offering that is selling you a fiction, and what they're really after is your Social Security number, your bank account number, or a verification code, which is the actual goal of the call. Write this down because it's your protection. The real Social Security Administration will not call you out of the blue and ask you to confirm your Social Security number or your bank account details over the phone to comply with a new rule. They already have your number. When they need to verify something, the legitimate process runs through your application, your redetermination paperwork, and official notices, not through an unexpected inbound phone call demanding immediate action. If someone calls claiming they can handle the new bank access rule for you or can protect your accounts from verification for a fee, end the call. Then, if you have genuine questions about your own situation, go directly to the source. Call the SSA at 1-800-772-1213. That's the number you look up yourself at ssa.gov, never a number a caller gave you, and report the scam contact to the SSA fraud hotline at 1-800-269-0271 and to the Federal Trade Commission at ftc.gov. Those reports genuinely help investigators track these operations and warn other seniors before they lose money. This entire rule comes down to a short list of things you can actually do this week. 1. If you're on SSI, make a complete list of every financial account with your name on it, including old and forgotten ones, so you know exactly what a verification would find before it runs. Call institutions directly if you're unsure whether an account is still open. 2. Total up your liquid resources across all those accounts and understand where you stand against the resource limit. If you're close, that's your signal to get clarity now, because a forgotten account is exactly what tips you over the line. 3. Report changes accurately and respond promptly to any verification or redetermination notice. Accurate, timely reporting on your end is the single best protection against an overpayment you later get asked to repay. 4. Protect yourself from a scam. No one can shield your accounts from official verification for a fee. The agency will not cold call you demanding your Social Security number or bank details to comply with a new rule. If that call comes, hang up and verify directly through ssa.gov. I want to close by saying something directly to you because I think it matters. This rule is part of a larger shift toward more automated, more frequent, and more complete verification of what seniors, half the systems are getting better at looking. And that trend is not reversing. None of this comes with a friendly government letter walking you through what it means for your check. The agency doesn't call to coach you through staying compliant. The system simply runs. The people who stay protected aren't the ones with the simplest finances. They're the ones who understood how the verification works, knew what it would find, and got their own picture in order before it ran. You watch this entire video, you already understand this rule better than most seniors ever will. Now take the next step. Subscribe and turn on the notification bell if you haven't already. The verification systems behind your benefits keep changing, and this channel covers every change in plain language before it lands on your doorstep. The next update could be the one that affects your specific situation, and you want to be here when it posts. Share this video with one person in your life who's on SSI or Social Security, a parent, a sibling, a neighbor, someone from your community. One share from you might be the thing that helps them get their accounts in order before a verification surprises them. The system is not going to call and explain any of this in plain English. You might be the only one who does.